everybody that is not tuning in right now. There we go. All right, guys, we're going to get started in risk management and averaging in and out. It's kind of a lesson I think a lot of you guys need as long, just getting into meme coins or have been into meme coins for a while. This is definitely a lesson I think that could help you guys out and help get consistent with trading, not just meme coins, but also cryptocurrencies, stable coins, altcoins, whatever you're doing in the crypto stock space. This is a lesson you need to hear. It's really targeted towards meme coins right now because that's what's hot. It's obviously what's making some money. So we're going to dive into that. The goal is to understand how to manage risk in meme coins. Also, learn to identify ideal entry and exit points because I see a lot of you guys entering at the top of green candles and then getting scared through the pullbacks when it should be opposite. You should be adding into pullbacks under certain circumstances, and then you're not going to be as fearful in those dips. And then how to master averaging in and out so that you are comfortable through your trade. You have a trading plan before you're entering and you're not just chasing the money. And then, as always, we're not financial advisors. We're just sharing our own personal opinions. So the number one thing, meme coins, they're very high risk, as we all know. And there's a lot of big rewards as well. So you're risking a lot to make a lot. And that's something you have to understand. Number two, they are short term. We are not holding these long term. They have no utility. Majority of them, 99%, probably have zero utility. There might be a couple, but no utility. This is short term. We're, kind of joining on that hype, and that's it. And they are fueled by community and trends. That's all they're fueled by, and then also driven by market speculations. That's meme coins. 99% of them go to zero. That's something you guys have to understand, that 99.9% of them probably go to absolutely zero. So when you're entering a meme coin, this is not a long-term hold. This is not something you want to bag hold. Obviously, it happens sometimes because you didn't have the proper things in place for that trade, or you went away like me and didn't watch your charts like you should. There's things that are into that make you bag hold, but obviously that is not the whole goal here. So the first thing we're going to go over is risk management, the basics of it that can help you whatever you're trading. Meme coins specifically, I only allocate 15% of my portfolio to meme coins. And that doesn't mean I'm going in with 15%. That doesn't mean I'm trading with that full 15% on one specific coin. I'm probably only using 5% of that 15% on each meme coin. That's number one. And then obviously, high risk, high reward mentality. I'm willing to lose 50% to make 10x, 20x, whatever the goal is that we're shooting for. So that's another thing. And then stop loss approach. You have to have a set stop loss in before you enter that trade, because you can't enter that trade and be like, oh, I got a stop loss in place. I'm okay. I got a mental stop loss. Boom, it gets to that mental stop loss. And you're like, I think I'm going to hold on a little longer. And then it's a long, long trail to the downside of like, oh, okay, well, now I'm in too deep. Now I'm just going to keep holding. That's bag holding. And that's what we're trying to avoid with this proper risk management in place. So good entries. Look for dips. Enter when dips start to reverse or hit key levels of support. I see so many of you guys literally just chasing green candles. That's the number one thing I see a lot of you guys do, especially when we all were calling out a coin. It's at the very top, and you guys are asking, should I add here? Should I add here? Because you're worried you're going to miss it. Literally, what coin or what stock? There's probably 0.001% stocks and crypto that just go completely straight up and then completely straight down. So you have to, try to get in to chase it. Those aren't the ones we're trying to take here. We're trying to build consistency within our trades so that we can do this at a high level for a long period of time, whether that's meme coins, whether that's stable coins, whether that's the stock market. You have to add in dips. And I'm not saying the dips that go straight down like a falling knife. I'm talking about the dips that start to reverse. So as you see over here on my screen, you see this dip starting to come down. You see it wick, which means buyers are trying to pick it up. And then as this is turning green, we're seeing people buying it back. That's not a bad place to add or buy in, because again, then you can risk, let's say, the low of this right here, this move maybe, and then you're not risking as much as if you added up here and risked all the way down here. You're cutting out a lot of losses simply by doing this, because it might not even give you this opportunity. It might just come down and it might be a rug pull, and then you're like, oh shoot, I am so glad I did not add there. So there's small things like that. Another one right there. Another one right there. All these are good add points. You can't be looking for absolute moonshots. I know that's what you want. You want to build generational wealth in one single trade, but that's not going to be consistent. You're going to lose a heck of a lot more than you win, whether that's again in stocks, crypto, anything related to trading. You have to build something that's sustainable and something you can do consistently for a long period of time. So that's number one. Again, avoid chasing green candles. I know it looks so enticing to add right here. You're like, oh my gosh, this is going to the moon. I'm going to miss it. I'm just going to add right here. And then, oh my gosh, in this pullback, you're going to be sweating because you're like, oh my gosh, did I just add at the dead top and now I'm going to get rugged? Like, that's not the mentality we want. We want to be comfortable in the trades, relaxed, and have a trading plan in place before we even enter that trade so that all we have to do is follow that game plan. And then, obviously, watch volume. That's another big thing. Why are we going to be adding at the top if volume's starting to decrease? Obviously, this is different if you catch the coin early because there's going to be a little bit of less volume and you have to have a better trading plan as far as the marketing of the coin and, let's just say the utility of the coin if it has any. So watch the volume, watch where you're adding, make sure those ads are worth it. I would rather you guys take a small starter. Let's say if you think this coin's going to be a great one, take a small starter and then look to add in dips. If they're being bought up, that's obviously showing that there's more buyers trying to push this coin back up. Next slide is exits. So this is something I've been learning since getting into meme coins, and I know meme coins have been around for a while. They've only been hot for a period of time, but everyone needs to know to take profits gradually. There should never be a buy in once, sell out once. Never. There should never be a trade that you do that unless it hits your stop loss and you take a starter. It's not your full position. You take a starter, hit your stop loss, and you took a starter, hit your stop. That's it. There should be no buying in, selling out. You need to learn to average properly. That's the main thing right here. So what I do for exit strategies is I sell in 10 to 25% increments. Another reason why I do this is because it's not going to rug the stock. If you were trading with large size, it's not going to rug the stock if you're selling in small percent sizes. So one thing that I see, and this isn't 1 and 2 isn't where I'm taking my profit. I'm going to be taking that profit as it's going up. So let's say this is it right here, and I entered down here. I'm going to be taking profit into these green moves, these green pushes is where I'm going to be taking profit, and then this is where my stop loss is going to be. So this final sell occurs when volume decreases or you get more than one lower highs. So this is a lower high because again, this is the high of the whole entire move, comes on down, has a lower high, one. That I'm still comfortable staying in that with just one. But when it has two lower highs, because it's lower than this move, and you're starting to see a stair step pattern, just cut it here. You can always re-add once it drops all the way down here. Always. You can always re-add. You can always assess while you're out. You just don't want to be getting stuck in a rug or getting stuck in bag holding mode where it just continues ripping down and you just keep pushing your stop loss lower and lower. So as this reversed here, I would have probably taken it as it took the low of this candle right here, showing that it's on its way to make lower lows. Obviously, this could have just ripped back up instantly. I'm not saying that. We're trying to just cut out all of these 1% moves that don't happen as often. We're trying to build consistency. Again, that is the whole goal of enters and exits through trading meme coins. And then avoid panic during pullbacks. That was another huge one that I saw out of you guys. And I don't know if you guys are the one listening or the ones that were trading with us when we kind of first started the meme coins, but we would have a normal size pullback, let's say like this one. Everyone's freaking out. Like, oh my gosh, this is it. This is the end of the move. And then it would rip through high of day and they sold because they got too scared in the small little ones because bots and whatever it is will dump it down, buy it back up. The bots kind of step in and people would freak out on that. But this is a good exit strategy. Remember, 10 to 25% increments. You want to sell more than one time. It should never be an all out. You should be taking profits at key levels. Let's say 2x, 5x, 10x, whatever it is. Don't be looking for moonshots, guys. Average out, get your principal out first. So all you're risking is profits. You're not risking your money that you put into this coin. You're only risking profits. And that's a big thing. I think a lot of you guys just shoot for the moon too much instead of just trying to get consistent gains. And I'm not saying you don't have to shoot for the moon, but when we get to 2 to 5 to 10x, take half profit, take 75% profit, let the other 25% run. You can always add back. If you get a good dip and you see it being bought and back up, you could always buy back. And then as long as it gets back up to high of day, then you could take more profit there and then see if it breaks. If it breaks, great. You took profit again. You made a little bit of extra money and you're good. But need to sell out in 10 to 25% of what you have in that coin. That is a very key lesson to learn, because you're not going to tank the stock with large size. And also you're locking in profits as it keeps making new highs. That is one key lesson I had to learn in trading, whether it was crypto, stocks, in order for me to be profitable. So after I learned that lesson is when I truly became profitable as a trader and as an investor. You can't get scared in the dips. You add in the dips as long as they get kind of show a sign of being bought up a little bit. You don't just want to, add in a falling knife. You want to wait for it to kind of start to reverse to the buyer side. And that's where we add. And then also final sells occur. And this is one lesson that I added probably 2 weeks ago, because I have this in kind of any long-term holding I have, is two lower highs. I went and back tested this on a lot of meme coins and it would have worked great. Yeah, I might have missed a couple big moves after it kind of reversed and then randomly it just pumps right back up. Yeah, I would have missed a couple, but I would have saved myself so much more money if I followed this rule. So averaging in, don't be afraid to add to a winning trade. So let's say you have a starter, just like point one says over here with averaging in and out. You can, add to a winning trade only during dips with signs of recovery. So you can take a starter, but don't be afraid to add to your winning trade because you see a good dip opportunity. You see it being bought and back up. Don't be afraid to add for that to go back up to the highs of days. Ensure dips are bought up or consolidation before you buy them. That's another thing. Don't just, buy into a falling knife, like we said, and then buy in with 50% and add on dips in winning trades to limit risk. So let's say I take a starter. I like this coin. I take 50%, initially, and then I keep adding in good pullback opportunities that I see get bought and back up. Before you know it, I'm in 75% of my account. This thing's looking great. I start averaging out slowly, and then it has another dip, and I could add more because I've already taken some good profits at the highs. I've already gotten most of my principal out. So now I'm just risking profits and I have more money to play with, and I take the risk out of the trade completely because I got the principal out. Now I'm only risking profits. That is the best place to be as a trader. When you get, let's say you could even lock in 2x. Let's say you put in 100 and you're locking in $500 and leaving the rest run. That is the best thing as a trader, knowing that you're only risking profits. Everything that you already made, you made money on. Now you're just risking a little extra profit. Make sure that ad is worth it as well. I put it there at the very bottom. Do not add for FOMO reasons, fear of missing out. Make sure that ad is a proper ad and you're not just adding because your emotions are getting involved in trading. I think that's going to be a good group lesson that I really want to lead sometime next week maybe, about your emotions. Your emotions as a trader, that's how we take money from other people. That is where we make money as investors and as traders, is other people's emotions. So that's one thing that you can build a strategy on, are emotions. Every single person on this earth has emotions. And if you can learn to master other people's emotions, like the Elliott wave, one of our most profitable strategies on the stock side, and we see it in the crypto side as well on more stable coins, it is probably going to be the one thing that you can do in meme coins that are consistent, are people's emotions. That's the number one thing. And then for averaging out, ensure dips are bought up or consolidating before adding. I actually messed up that slide, and then I kept all these the exact same. So that was not that was on me. Obviously, I was sleepy when I was making this last night. And then never sell your entire position in one order unless it reaches your stop loss. You should be taking profits slowly as it climbs in 10 to 25% orders, just like I kind of said. And then finding coins early. So this is kind of how I do it personally. I check Discords, Telegram, and social media for trends. Meme coins are all about trends and communities behind them. So just look what other people are talking about. So like every time you guys throw one in the Discord, I go and look at it. I go and look at what the socials are of the company, what the community behind it is. Are other communities talking about it? Are more people kind of catching on to this? And what is it about that coin that's becoming popular? You know, meme coins are all about popularity and what is funny, what is trending. So you just got to look at social media, Discords, Telegrams as you're looking for these coins and doing your research. And I like to focus on low to mid cap market, mid market cap coins with active interest early in volume spikes. That's the number one thing. And then the filtering the noise, I look for coins where developers have sold out but are rebuilding. So one thing I don't like is getting in coins where the insiders and the devs have a large percent of that holdings. That scares me a little bit, and I'm not a huge fan of that because I'm expecting a rug. And then validate with data, not just hype. So go and look at the communities, look at their marketing efforts, look at what their utility is. If they have utility, don't just go with the hype, look into the data. Now, this is a question I want everyone in here to answer. I know these pictures might look funny, but what do all of these guys in this picture have in common? I want you guys to answer this. Everyone in here, answer what you think we all have in common. So that's me, that's Jimmy, and that's Jason. What is it that every single one of us have in common? I'm gonna give you guys a minute. I want you guys to all throw in the chat. You're white. Okay, that's very true, but I don't know if Thanos up here is white. I more say he's purple. You know, I don't know. Just my own opinion here. Emotions, goats, hung, aura. I like it. Hung again. Yeah, that's funny. The energy you're giving out. Yeah, it's pretty accurate. But no, I don't think anyone's gotten it so far. It's over an effing $1 million in profit. That's all it is. You guys were close, but it's over a effing $1 million in profit. I just wanted to put that out there on why these lessons we're teaching is important. I've personally been doing this for 7 years. Jason's been longer. Pete's been even longer. JDE's a little bit new to this, but over 100 or not 100, I wish, over $1 million in profit. So that's one thing I want you guys to know is that you're not just learning from people that just got into this and really don't know anything about investing, because how we all made this, and I could speak for on everyone's behalf of how we've managed to make over $1 million in profit is emotions and learning how people's emotions get caught up in their trading and how we can take money from them. That's the whole idea. You know, the FOMO buyers, boom, that's our liquidity. We're out. Like that's exactly, things, letting people's other emotions get into their trading, and we can see it play out in the charts, and that's how we're making money in the markets. Stock market, exact same way. Playing on other people's emotions, taking money from beginners. Meme coins, same thing. You know how many people over these next couple of weeks are going to get into crypto due to colleges on break, going up on Christmas, people are bored at home? That's where all this education that we're talking about right now will pay off, because we're going to be taking money from them. That's the whole idea, is we take money from the people just trying to get into this that don't know what they're doing, are like, oh my gosh, I saw on social media I can make so much money trading meme coins. I'm going to get into it. Boom. We take money right from them. In every single trade, there's a loser and there's a winner. Every single trade. So we want to be on that winning side, obviously. So that's why we want these proper educations in place to know when to get out before these other people, because they think this thing's going to the moon. Boom, we get out at the right time. It reverses. We got out. We made our money and we dip. That's the whole idea. So that's exactly how every single one of us has made $1 million in profit. Now, what's next? For 2025, I know we talked about this a little bit in the last lesson, but really what is next for this group specifically? What's next for the stock community? What's next for profit chasers right here? What is really next? And this is what I was really thinking over the last little bit. Jason does a really good job at running the stock side. I think we do a fairly decent job at running the crypto side with a few more call outs, which we're working on. I just like to really put research and mindset into anything I'm calling out, because I feel reliable. Even though I'm not your financial advisor, I'm not reliable for anything. I still feel like I want to call the best thing out possible. I just don't want crap running out of my mouth because I'm in it and I'm bag holding and I'm like, oh, maybe this cool community can like, get me out. That's not the goal. We're all here to build money long term, not short term. If we are all here for short term, which if you are, this isn't the group for you. If you're just here to make a quick buck and dip, that's not what we're here to do. We're here to build something consistent so that regardless of what goes on in the world, you can always make money. We don't want you to have to rely on anyone else. We want you to rely on only yourself, showing up each day and making money. So with this group, I'm going to give you guys the opportunity. We did this last time and we got great feedback from it. For every single one of you guys that upgraded to the mastermind and upgraded to the premium, best decision you'll ever make. I'm giving everyone in here a chance before we raise prices because 2025 is coming, and I'm not going to lie, it's not going to be like this forever. So for $99, you're going to get early access to stock and crypto callouts. That's going to be the main one that I think a lot of you guys are going to want to join for. And this isn't happening right away. It's happening probably sometime in 2025 because we really want to take this education seriously and make you guys all money. That's the whole goal. So I'm going to give you guys a chance. I'll even copy this link, throw it in. But for everybody that joins tonight, I'm going to give a free one-on-one lesson too. It's going to be an hour-long one-on-one lesson where you guys can pick my brain. You guys can ask me questions about stocks, crypto, investing in general, lifestyle, whatever you guys want. I will sit down with you. Actually, it's a half hour. I totally messed up there. A half hour. I'm not giving a free hour. Sorry, guys. I'm giving away a half hour one-on-one lesson in anything related to investing because the reason why I got into Profit Chasers is because I really want people to just lock in. I want to help people that want to learn and want to make money, understanding that this is not a get rich quick scheme. So I'm going to send this link in there, but we're going to open up the questions. Any questions you have about this lesson, any questions you guys have in general about crypto that I could help with,